Hello traders, welcome to today's daily analysis. Right now is 8:20 Eastern Standard Time, November 4th, Friday. So first of all, welcome to the weekend and hope you enjoy, I think, a last piece of peaceful moment, because really the next week's election is going to be turmoil for the financial market regardless of who wins. Because honestly, it's going to be nasty. And if it's not nasty next week, then I will be really respectful for the U.S. democracies. I really respect their civil rights and their progress through these couple hundred years of nations. But we will see right now. Maybe it's just like any other elections. After voting, everybody goes back to normal. That's the best case scenario. But nevertheless, let's get into our analysis today. So now from payroll today, a number, there's no deviation. So we didn't really trade the US data. We did trade the Canadian data, which unfortunately turned out to be a loser, and I will go into more detail in that. But the non-farm payroll number from US was actually no deviation, was actually slightly negative than expected and previously, but overall it's very solid. So that's what you have to understand when you're looking at certain piece of data. If you are a trader doing intraday trade, yes, you can make money just by short-term deviations. But economists and people are actually looking at a long-term trend. So we're not looking at certain number individually and saying that economy is doing well or bad. It's really got to look at the long-term picture. And long-term picture, the job data has been very good actually, and that's why right now really there's no reason for Federal Reserve not to hike the rate if they are really data oriented. But I understand their concern, don't want to do anything drastically before the election. So that's a fair statement. The Canadian job data was actually large than it's a surprise deviation. Data was way better than expected, and that's why we took a long trade. But actually, it turned out to be a loser. Now the reason is because if you're looking at this kind of data, you have to look at the details. And although the Canada data was a good increased number, but it mostly come from part-time job, and there's nothing wrong with part-time jobs, but of course to have a solid economy, to have a really foundation, a stable economy, that people want stability. They want people to get full-time jobs and stay in a full-time job, which I don't know if it's good or bad in terms of my own view, but it's certainly good for the economy in general. Sentimentally, WTI closed another down day as usual, and the equity market are still down. So we have a consecutively 9 days already, and most likely will continue to be like this unless we have any good news prior to the election or after the election. And again, like I said, even if Hillary Clinton wins, I still don't know how the financial market will react. It might react in many different ways, and the reason is because we still have this investigation from FBI, which we never know what's going to happen. And another news from OPEC, there seems to be a sparring between Saudi Arabia and Iran. As mentioned again, these two are the biggest rivalry, not only in the oil business, they are rivalry in terms of history, in terms of their culture. And that's why I keep saying that it's very hard for OPEC to reach any real agreement, because there's so many there's so many disagreeing issues among the member countries, and that's why sometimes don't have too much faith. Like I personally are very biased in terms of toward OPEC. Really don't think they can make any meaningful agreement unless they become friends first, or unless they are really willing to work something out, and that is not the case nowadays. Okay, so first thing first, let's talk about our Canadian trade. So today we took a cable cat short. And of course, we are long Canadian dollar because of the job data. But why did we pick British pound? It's really because we don't have any other thing to go against Canadian dollar. Now, all the safe haven currency, euro dollar, Japanese yen, and Swiss franc are a rising star nowadays. So we don't want to go against them. And the US dollar, because the non-farm payroll came out at the same time, so we don't really have enough speed to react to that data. So generally, we don't like to hedge these two currencies, although sometimes they will create a perfect storm. But for today's example, it's not really a good case since people are more bullish in US dollar at the release of the non-farm payroll. So that really leaves us with few currencies to pair. We can of course go with New Zealand dollar and Australian dollar, but right now the Canadian dollar is in an unfavorable position against them. So that really leaves us with one currency, that is a British pound. Now, although this week we have a very good positive sentiment from the High Court ruling into a British pound, but still we think the fundamental strength of a British pound is still in a very bearish side, and that's why we pick it and expecting to see some rebound. Now, that was not the case, and the reason, like I mentioned, is because the data also came out as largely positive deviations, but it came out mostly from part-time jobs. Now, you might ask, didn't we have this assumption before we took the trade? Shouldn't we not taking the trade? And I tell you what, you're absolutely right. If I had seen the data details, I would not have taken the trade. But that is the conflict when trading news, is that sometimes you have to jump in before you get all the information. And that's why I don't commit a full percentage risk capital in my short-term intraday trade versus my daily or weekly trade. And the reason is because the information is not on the same starting point. When you're doing daily trade or weekly trade, you have a lot of time to digest pieces of articles. You have a lot of time to really let the market tell you exactly what is the direction. When you do an intraday trade in 1 minute, 5 minutes, you don't really have time to gather all the information, because if you say, okay, let me read all the news before I take the trade, sometimes the price has already gone too far for you to make any meaningful profit. So I do agree there is a lot of sense of gambling into the intraday trade. Your probability is certainly way much lower, and the reason is because you do not have the leisure to digest all the available informations. So sometimes you do have to jump in the gun, and sometimes you win, sometimes you lose, and for today's case, we surely lost. But I was absolutely fine just because I know that's a risk associated with intraday trading, especially when you're trading the news. And really, this kind of thing, you say, how can we make it better? There's really nothing much you can do in my personal trading style. It's because if you say, okay, next time let me read all the news, then you're not going to be able to make money because the profit has already gone if you jump in the trade too slow. But if you say, hey, let me still jump in the trade, and the reason is because we already come to, like, traders came to the market with a preceding bias already. So today the bias is already bearish toward Canadian dollar, and the reason is because the commodity pair are in a bearish tone when we have a risk of sentiment. That's the first thing. Second thing is that WTI market has been down consecutively for the past 7-8 days. Third thing is that we still have a lot of negative news from OPEC. And lastly is that Canada itself does not have a fundamental, does not have a sentimental positivity for the past few weeks. So all this bias has given us a very negative sentiment toward Canadian dollar. We are looking for, that's why we're always looking to trade with deviation only. Now, today the deviation is completely non-reactive. That means that we couldn't even move to break even because we were in drawdown at the very beginning. And that's what happened, when I say you win some, you lose some. Today, really nothing much we can do in terms of management. There's nothing much we can do in terms of jumping the gun. And am I going to change my style? Not really, because that's really just, let's understand that's the nature of this strategy. And I'm going to go into 5-minute charts so you can see more clearly. So 8:30 was the non-farm payroll. So that was actually the candle we got in. And as you can tell, it is a very bullish candle, which was completely against our position, which is short. So we got in probably at the very low here, 1.6717. So we got in here at the low, right? So I'm, making a fool of myself, selling at the low and getting stop out. So today I am the loser. There's no other way around. But if you ask me anything I can do better, really, like I say, I didn't plan to get in here. I just click my market order, and that's where I got filled. So that's why I say you can never compete with computer. So for me, the only way for me to make money is if this thing keep going down to here. And that was the original plan, because we're looking at the bullish data from Canada. And if that does not react that way, then that's really, there's nothing much you can do. We got drawdown at the very beginning and finally get stop out. And why do we getting at this low? Again, you are not computer. You can never compete with high frequency trader who trade with computer, with algorithms. So the only possibility for a discretionary trader to make money is really to grasp the meat, and of course the first thing, you have to get the right directions. And today we are wrong because we did not have enough information, and that is the nature of intraday trading. So I hope you can learn something from it. Now, whether I'll suggest you to do this kind of trade really depends on your style. This is definitely not my bread and butter strategy, because like I say, I'm really meaning to make small profit out of this kind of intraday trade. Never committed the same amount of risk capital in my other daily and weekly trading. It's because I know by nature, this kind of trade has a very big disadvantage, which is the information bias. But of course, by nature, this kind of trade also have a very big advantage, that is fast in, fast out. So you're making money by saving time. You got to think about this way. You are not making money. You're making money by this short-term momentum, and you always have a lower winning rate. You probably only have one-on-one winning rate, and your winning ratio is only maybe 1 or 1.5, but you have a lot of trades compared to long-term trade, and that's why you make money by the volume. So let's get into our daily 28 pairs. And of course, it's Friday already, the market closed already, because like I said, I was not intended to take any trade anyway at this weekend, and I hope you didn't take any trade either, because if you're still in the trade, just understand that the weekend anything can happen in the US media that can again provide a lot of sentiment into the US election. Once again, will rattle the financial market. So if you're in a trade, I hope you have a sounding stop loss. I hope you have protect yourself well. And let's get into the analysis. Let's talk about euro dollar first. So euro pound is once again at a very indecisive movement, and there's no surprise because British pound actually have a pretty good strength due to this week's positive sentiment. But euro dollar is also have a very good strength, positively sentiment because of the US election. So that's why we have this kind of indecisive movement. Same as Euro Swiss, look at it, it's nothing really meaningful. Look at the long-term picture right now. Euro dollar, once again, it's another update. We have been up for consecutively many days. And now, as I mentioned, we are approaching this 200-day moving average. Also, we are approaching this kind of trend line, if you want to draw something like that. Or in general, it's just the whole thing is going to reverse for sure if the election result turn out to be win for Hillary Clinton. But how it's going to reverse, we don't know. But just give you a heads up saying that, hey, there's another pretty good chance if the election result is not a win for Donald Trump, then the US dollar will be once again on the bullish side. Euro Aussie, again, another indecisive bullish day. Euro CAD, we have same thing, consecutively update for euro dollar as a safe haven currency. And Euro New Zealand, it's again indecisive day. Euro yen, safe haven versus safe haven is an indecisive day. Pound Swiss franc, a little bit update for British pound due to the good sentiment, the good news from yesterday's ruling. Cable, again, we broke, this is kind of significant. We actually broke above 125 right now. So the next support or resistance is right 128, around that area. But right now 125 is a very good zone. Now, if anything, of course, I'm still very bearish toward British pound, but I don't want to cash the falling knife per se. I know it's not falling, but if you're shorting it, then it's a falling for you, right? So it's just different position. So I don't want to go into right now. Of course, I'm really not planning to take any long-term position prior to the election. And that's perfectly fine. I understand that trading, you really have to look at a long-term perspective and be a little bit more patient. I understand that this is not like a job you gotta work 24 hours a day. This is more like an investment. It's more like a trading opportunity. You only want to get the best probability, the best opportunity, and then make the best money or profit out of it. Swiss franc, Japanese yen, again, safe haven versus safe haven. Nothing really on my radar. Dollar Swiss, another down day for US dollar. Again, everything could change after the election, so don't rush in to take anything. Dollar CAD, again, look how bearish US dollar is. Even against Canadian dollar, which is considered very bearish right now, they still have this kind of a reversal bearish signal. Let's keep going. Look at dollar yen. Another down day for dollar yen, because another up day for all these safe haven currency. Aussie Swiss franc, another down day. So right now it's really a sentiment play, as I mentioned many times already. Aussie CAD, Aussie New Zealand. I'm actually surprised that Aussie CAD is a down day for Australian dollar, and it's very interesting since Australian dollar is definitely way much better than Canadian dollar. So it might just be a short-term profit taking, things like that, since we are at a very high point right now. Aussie yen, and Aussie yen is a bullish reversal signal, but again, don't jump in to take any. Don't jump into trade to against any safe haven currency, because you do have a very unsafe event coming out next week. CAD Swiss is another down day for Canadian dollar. No surprise. CAD probably another down day as well. Well, it's an indecisive day for CAD. New Zealand Swiss, New Zealand dollar, another up day. Oh, small update, another New Zealand, another update. Yep. And New Zealand is probably another down day. Oh, okay, it's an update for New Zealand. Alright, so again, really nothing much going on my plate, to be honest with you. And we could, however, take a look at weekly trade. Because that's what I'm trying to do nowadays, is to get into weekly trade as well, to have a better picture of everything. And take a look at weekly, see if we have any opportunity. I'm just gonna quickly. So you see, if you look at a weekly perspective, Europound. Now, it's interesting about weekly is that the individual candlestick has a lot more volume. That means if you're looking at a daily trade, then the individual candlestick has less value than the position. If you're looking at intraday trade, the candlestick really has no meaning. If you trade it 5 minutes, 1 minute, it's really not. It's really about the momentum, nothing to do with candlestick, nothing to do with individual. It's about positions. But if you're doing a weekly trade, then each candle represents 5 days of trading, and that's really a significant data in terms of a price action. So that's why it's different when we are doing a weekly analysis and daily analysis. But you know what? I don't want to. I'll do this maybe on Sunday when the market opens, just to get a better idea, because we still have few candlestick that needs to go prior at the Sunday afternoon, at least for my brokerage. So I'm gonna wait. So what I'm trying to say is that the candle is not closed basically right now, because what happened is the trading day is short on Friday, right? It only closed at 5 p.m. But when it opened on Sunday, generally there will be a gap, right? So that's where you're gonna see basically that candle is going to be incorporated into an overall analysis. So I'm going to talk more about that, but nevertheless, I would really suggest you stay out of the market before the election, because really it's a 50-50 big event chance, which we don't know what's going to happen. Let's take a look at next week's calendar. So next week, Sunday, we have monetary policy minute from Japan, which again it's not going to be a big event right now because really all spotlight is really on the US election. So Monday, a trade balance might provide different things for Australian dollar, but I was really looking, even the manufacturer production, it's really not important. I was really looking at the US election, presidential election, as the most important thing. So take a look at that. If you really feeling like trading this intraday trade, yeah, of course that you can trade with the box because they're going to open a ballot box, and you can trade exactly the same way as we trade pre-exit last time. Is that you can go to Forex Live, and there's a lot of statisticians which will actually calculate the live statistic by the ballot box. So last time they already predicted that it's a exit. It's an exit because of the statistician saying that you use a mathematical calculation. Of course, it's not 100% accurate, but if you have to rely on something, of course, rely on some mathematics formula is way better than rely on emotion. So go into there, and if you see any chance that Hillary Clinton is going to win, then that's a chance you can buy back US dollar and hold it for a long time. Now, which pair are you going to hedge? Of course, you can buy dollar Swiss, you can buy dollar yen. All these are very good pair because providing that they have been largely shorted, especially dollar Swiss, I think. Let me take a look. So if I go to my daily chart, dollar Swiss will actually be a very good pair to buy back. And same as euro dollar will be a good pair to short if the election is a win for Hillary Clinton. And you have to get in early. That means you have to really betting on the statistic. But if you don't want to do that, then perfectly fine. Stay out of it, and don't need to make this kind of money. Because really the probability is really low. 50-50, we don't really know what's going to happen. And after that, the Wednesday, we're probably going to get back to normal. But again, these events will be very big and it's going to affect the afterward. So we cannot really predict what's going to happen afterward. Of course, New Zealand dollar have the statement and cash rate and expecting about 25 base point, 25% cut, 0.25% cut. And remember, this has already been priced in a couple weeks ago. That's why people were shorting New Zealand dollar. But right now, New Zealand dollar has been bolted largely due to the US election. So what I'm trying to say is that if the election result is a win for Hillary Clinton, then most likely New Zealand dollar will be short again into on Tuesday. So another thing you can do is right after the US election, if it's a win for Hillary Clinton, then you can quickly look into short New Zealand dollar, because we expecting a rate cut. But of course, again, it is a very volatile event. You don't need to do this kind of trade. You can always trade afterwards. And Thursday, nothing much. And Friday, nothing much. So really next week, it's a very big political event, sentiment play. I wouldn't suggest you to trade any fundamental data. You can take a look at that, but if you want to trade intraday trade, you can always turn on the news and trade with the sentiment. The only thing that's worthwhile to trade as a fundamental data is the New Zealand official cash rate, but you don't want to trade the intraday trade because if it came out as 1.75, that's already been priced in. So what you want to do is to trade ahead of that. Now, normally we don't suggest people to take trade, less than 48 hours. That means if you want to take this kind of trade against New Zealand dollar, you probably want to take it on Monday. But because of the election, so we really suggest you to wait everything. So don't do anything after the presidential election. Wait to see who wins. Then, if it's Hillary Clinton win, you can definitely short New Zealand dollar. If it's a Donald Trump win, well, you don't need to do New Zealand dollar. You can actually look into buy safe haven currency, or you can still buy New Zealand dollar if you see any short side, any opportunity for you to buy at a support. Okay, so let's look at the New Zealand dollar right now. So you see, we already had a very upside, right? So we will see what happens if next Monday, Tuesday, before the result, the price can go down a little bit here. Then yeah, you can buy New Zealand. You can buy New Zealand dollar if the result came out as a win for Donald Trump. Now, if it came out as a win for Hillary Clinton, then you can actually short New Zealand dollar because, like I say, look at the past weeks. You have this kind of downtrend right here, all this kind of downtrend was a price in for New Zealand dollar short. So people were expecting to see a central bank keep cutting, and that's what they said. So they keep selling New Zealand dollar, selling New Zealand dollar. And suddenly we have this kind of reversal. This kind of reversal, again, is largely due to the US sentiment. So what's gonna provide you is that if you are still more bullish in terms of US dollar against New Zealand dollar, then all you need to do is wait for that little bit of factor that is a Hillary Clinton win. If Hillary Clinton wins, then you are looking at a 50%, 38%. This is a very good area for you to enter a short trade, and you can just put your stop loss above here for a long-term perspective and just let it run. So that's pretty much what I would do. But again, it all depends on who wins the election. In terms of election day, I am probably going to trade intraday trade with the statisticians. And then if we have a win for Hillary Clinton, then again, I am going to short euro dollar and buy dollar Swiss. So I am actually in favor of Hillary Clinton, and it's nothing to do with my political stance. I don't really care. I'm not an American, but I'm saying as a trading perspective, because right now the market has priced in as if Donald Trump wins, and that's why you want to make money against the crowd, basically. That's where the money is to be made. So right now the market is very pessimistic due to the Donald Trump possibility of winning. So that's it. And I will be here Monday again, give you another daily analysis, and I will trade Tuesday live. And if you have any question, feel free to comment or ask me below. Otherwise, play safe. Really understand that you don't have to trade through this kind of political event. If you want to stay out, that's perfectly fine. Okay, don't take unnecessary risks. Okay, thank you very much, traders. I will see you next week. Have a great weekend. Bye bye.